Welcome to a Wiser Retirement podcast. Before we get started with the episode, I want to tell you about a new ebook available on our website called Buyer Beware. Why do they keep trying to sell you that annuity? This ebook covers the various types of annuities, negatives to owning annuities, and better investment alternatives to annuities. To download this ebook, you can click the link in the episode notes or go to wiserinvestor.com and you'll find it at the bottom of the page. Now on to today's episode.
Welcome to a Wiser Retirement Podcast, where we believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Joining me today is Robert Swarthout, founder and CEO and portfolio manager of Teton Crypto Capital, and Don Friedman, president of Digital Assets Council for Financial Professionals. Hey, guys.
Morning.
How you doing? This is our special edition crypto podcast. We do this once a month. And some people are probably thinking, what is crypto? And the other people are going, let's get past the basics. So we'll try to cover a little bit of that today, as we normally do.
Sounds great.
So, Don, you're new to the table here. You and I go back to 2008. Thank you for making the long trek.
Sure.
Did you come out of Decatur?
Alpharetta.
An hour to get, you came across 285.
No, there was an accident. So they sent me through the back roads.
92.
Yes. Yes.
Welcome to the country.
Exactly. Great to be here.
Don, why don't you tell us a little bit about what you do?
So our company, the Digital Assets Council of Financial Professionals, was founded by Rick Edelman. For those of you who don't know, Rick Edelman is also the founder of the nation's largest RIA, Edelman Financial Engines. What we do is we educate financial professionals on blockchain and digital assets. We do that mainly through two different venues. One, through events, so conferences, webinars, virtual roundtables. Our big event is called Vision, which is June 13th and 14th in Austin, Texas. And another way that we educate financial professionals is we have a certificate in blockchain and digital assets program, which is an online self-study, take at your own pace course. Qualifies for up to 18 CE credits. What's really cool is actually a couple of weeks ago, we relaunched the program, which has been live for about a year and a half. Now we have 4 different tracks, which is an advisor track, a financial professional, so think home office or back office, a crypto industry track, as well as a consumer track. And then for each track, there's a basic track and an advanced track.
Okay. So our listeners, our clients who want to learn more about crypto can just go to the website, sign up for is there a retail track or what?
Yeah,
what
for
name?
The consumer track.
Consumer
so
track.
The easiest way is to either go to DACFP.com or DACFP.com/certificate, and you can learn all about the program.
That's really cool. There's definitely a lack of education in this space, even for advisors, to tell you the truth. It's probably, understanding crypto for a financial advisor is probably easier than the annuities that some of these guys sell, because those are pretty complicated, and I don't think they fully understand them, or else they wouldn't sell them. But it is definitely, I always go with the rule of thumb is if you can't explain it to a client, then you probably shouldn't be messing with it, right?
Well, not only that, but 82% of clients are asking their advisors about crypto. And 62% of clients say if the advisor doesn't understand it, they're going to go find an advisor who does understand it. So getting our certificate and understanding the asset class is a major differentiator and a great way for an advisor to grow their AUM and also educate their clients in an area that can be very complicated, quite frankly.
So you put on great events. You always have. When you walk the halls of your events, what's the buzz like? Is it kind of like us when we were doing ETFs back in 04 through 08 that people are like EFTs, ETFs? I don't is it just people just searching for knowledge, or is it a bunch of experts walking around?
So that's actually a great question. And actually that's the analogy that I give is, so when I joined ETF.com in 2007, people thought like, what is an ETF? Like, it's never going to work, makes no sense, mutual funds own the day. And so when you brought the community together, there was a real strong vibe and excitement. And now fast forward to, a few years ago when I joined, you're seeing that and you're feeling that same vibe, which is really, really cool. And the irony is now, like, you look at the ETF people and they're the dinosaurs now. So it's kind of funny. And my hope, the sports analogy that I give is I've been educating advisors for about 21 years. And I look at it, my sports analogy is I'm going for the hat trick. So when I started in 2002, I was focused on hedge funds, private equity, institutional real estate. And people were like, never going to work.
Yeah.
Clearly that worked. 2007, I go over to ETFs. Same thing. Never going to work. Clearly it worked. So when I started looking at and educating people on digital assets around 2017, 2018, same thing happened. Never going to work. Obviously the jury's out. Mm-hmm. I obviously think it's going to work. And if this one hits, then I got the hat trick.
I think the ironic thing about that brief story there is, if you talk to crypto people, all they want right now is crypto and ETFs, like to be able to get to the money that is in brokerage accounts effectively. But it's, there's many government bodies right now that don't want that. Yeah.
And as it relates to that, like, our kind of feeling on that is, if you wait until there's a spot Bitcoin ETF, you're almost like too late.
Absolutely.
So if you get in now, it's almost like a VC fund where you're ahead of the wave, and then by the time the spot Bitcoin ETF comes out, you're riding the wave at that point.
Yeah, it's the U.S. is behind in a lot of things when it comes to crypto, but there's even Canada, right? One of our closest neighbors has great ETF options for Bitcoin and many other digital assets. So,
what for early adopters, I'm speaking as a financial advisor at this point. For early adopters, there's kind of a big barrier to entry because you have limited options. If you want to trade a strategy, we had Wisdom Tree came out with their own index, but you have to use on-ramp in order to get to it, right? Which is I think $5,000 to join the platform, and then you put people in there, and then only that, from an advisor standpoint, then you have to be a leader and lead with conviction, and say, no, you guys need 1 to 2 or 3 or 4% of your money in this, and this is what we're going to do. Where we have people who ask about crypto. I have a few that said, I don't want to do any of this crypto stuff. We're not doing crypto stuff, right? It's a very confusing time. And you have a situation where, you have guys like SBF on the news stealing people's money. That's not good for anybody's business.
Well, you've got Bernie Madoff, you've got Elizabeth Holmes. You've got long-term capital management. The list goes on and on and on. It's not a crypto thing,
right?
What's happened? It's a people thing. So you can go back as far as you want in history, and you'll find people that were thieveries or just doing things that they shouldn't have been doing.
Mr. Ponzi himself.
Exactly. Right. Yeah. It's just not a crypto thing. And then in terms of, you mentioned something that we hear a lot from advisors. Well, I can't buy it. Well, so at DACFP, we're not necessarily telling you to buy the native coin. You don't have to change your asset management style to get access to the asset class. So for example, you can buy, there's ETFs, there's OTC securities, there's private placements, there's SMAs. So whatever the advisor has in terms of their asset management style, there is a way to access the asset class. You're just not necessarily buying the native coin. So you don't have to change your style, and you can get access to the asset class.
Yeah. What is this in the future? Is this it's its own asset class? I acknowledge that. But what is this 10 years from now? 10 years from now, crypto is part of our everyday lives. Crypto is, you're fun. You're solving problems, right? Yeah. You're buying crypto that solves problems.
I think, when I get this question, I just explain to people, because I always focus on the business side of it. I don't know what retail is going to look like, but from the business side, I almost view it as re-engineering the plumbing of the financial system. People don't think how an ACH works now. They don't think how a wire works. They just know it works. That will become a third rail effectively and become more efficient. And maybe one of them goes away. Maybe they all coexist together. But at the end of the day, it's about reducing friction, so cost and time. And, to me, I think that blockchain in general, or digital ledger, technology will just eat the finance world. Like 10, 15 years from now, we're going to look back and we're like, oh my gosh, this was something on the scale of what the internet did for information. This is going to do for value. So,
I mean, look at just one example is cross-border payments. So if you want to send a wire to another country, it's, I don't know, 5 days at 6.5%. Whereas with Bitcoin, it's 10 minutes and it's virtually free.
Yeah. It's those, it's all about getting liquidity into the system so that kind of stuff can work, right? And like having the on and off ramps. But, whether it's Bitcoin or other cryptos that solve that problem, I think that certainly that's the easy one to pick off the top, because that's high degrees of friction, the time, the money. And the fees can even go up from there when you're talking about a Western Union or a MoneyGram, where those are the people sending money to family overseas, in like a cross-border remittance use case. And those are the people that honestly can't afford the fees that they're having to pay. Sometimes it's 20% in some extreme examples. So, obviously MoneyGram and Western Union in particular has built their own treasury and their own functional wire system behind the scenes. So they have 100+ years of, built up, brand, brand equity, but also just like infrastructure that they don't have the motivation to want to move, right? Because obviously the fees are going to come down for them. But I think that you have these upstarts that are doing it in smaller corridors, like maybe from, say, the U.S. to the Philippines or U.S. to the Middle East. That's where you're going to see some real traction in digital assets. And Ripple, the company, is using XRP in that case a lot into Asia and a lot into the Middle East. And they're growing gangbusters in those regions over the last couple of years. So
let me just share some stats with you. Blockchain will grow 10 times over the next 4 years, adding $1.76 trillion to the global economy by 2030, according to PwC. Blockchain will save banks $120 billion a year, according to JP Morgan. So here's another example. Coinbase has more account holders than Schwab, TD, Interactive Brokers, and E-Trade combined.
Wow. That's the first time I've heard that.
$3 trillion in annual Bitcoin transaction volume. That's 3 times more than American Express. These numbers are huge.
And I would take the over on all those numbers over a 10-year period.
Yeah.
And the interesting thing is, another stat is all markets, obviously including the crypto market, was down. I mean, the crypto market was down about 77% in 2022. Yet while that was happening, the number of Bitcoin holders stayed steady and has actually gone up. So there's a lot there. There's a lot behind this.
Yeah, it'd be interesting to come up with a survey all those Bitcoin people. Obviously, that's not a possibility, but there are reasons for getting into it, whether they were trying to run from inflation that they were seeing in like their in a fiat world, or they were trying to get access to a different asset class. It'd be interesting to see that breakdown. But I think there was a lot of different narratives last year that kind of drove people towards digital assets, even though it was a ugly year for them from a performance standpoint. So.
Yeah, and that's another part too. Is as an advisor, you sit there and you try to explain this. That we're all understand we have to invest long term, but it takes on more volatility than essentially anything else, any traditional asset, core asset inside a portfolio.
Yet, if you look at do an overlay of like Bitcoin and Amazon, meaning when they in their first 10 years. They move in tandem. Like, you can't tell the difference. And listen, I'll be the first one to say, like, Amazon, when they launched, like, buying books online wasn't very exciting or appealing to me. But like, just look at the overlay. They're very, very similar.
Interesting. So do you think that, it's going to break out into segments where you have active management, then you have, ETFs that just hold like a cap weighted, and there's going to be a big debate on active crypto versus passive crypto? Is that where we're headed?
we're actually doing a session on that at Vision. So again, it's like any other asset class. Active thinks they can beat passive. I mean, I'm an ETF guy. I'm an index guy. So
yeah, I'm a very passive guy, but I think I would take the active on this one.
I don't know.
You don't know?
Again, it's the same thing. I mean, you can go back any period of time in history, and 8 out of 10 times, passive beats active. And the thing, and people, we beat them. Well, it's not the same manager that's beating passive in those 2 years. I mean, the only one that's been notably successful is Bill Miller. So beyond him, it's like, good luck. You know, see how that it's more about people want to like go to the bar and talk about, you know, all the different positions they're in or the active strategies, where I'll just, you know, turtle always wins the race. Yeah. So I'm an index guy.
You know, obviously I'm an active manager, so I'm going to have maybe a slightly different opinion here. But I probably will agree with you, but I'm going to kind of do a little nuance here. I think that while the volatility is so high in crypto, I think active can outperform there. But over time, as the volatility comes down, this becomes more of a mature asset class. I think passive is a better strategy. You know, I'm the guy that will tell you 99.9% of the current 20,000 cryptos are going to zero.
Yes.
So that's where I think that, you know, an active manager that's doing the right kind of diligence can maybe try to be on the right side of that trade more often than not. But it's, you know, it obviously is a gamble. But it's something that I think, you know, again, I anytime we get on this podcast, I always talk about regulation. Once regulations come, it starts helping clear that up. And, you know, at some point we'll have an ETF type product where you can have an index of some kind. And then I think passive starts to become a thing. Right now, you functionally have to do that yourself, right? And that's just not feasible for the average.
Well, Bitwise has BITW. I mean, I own it. It's a passively managed index fund, crypto fund.
But in my opinion, the way that they derive what the index is bonkers. Like they've chosen metaverse and all these other like very trendy things, and maybe that's part of the strategy. But like long term,
well, that's a different fund. BITW is coins. So they have. I think you're thinking of BITQ, maybe.
Maybe I'm getting them confused. But like the one that I was remembering was they had these different baskets they would have tokens in. And, you know, I guess different call them markets effectively. And Metaverse was one of them. And obviously Metaverse is not what people thought it was going to be, or Facebook wouldn't be shutting it down. Right. But it's a, you know, it's just a challenge because it's like, there's just so much, the hype cycles in crypto are so extreme. Yeah. They're magnified by social media. They're so viciously quick on the front end and on the back end. And, you know, if you can be on, you know, hopefully on the front end of one of those, if you're trying to trade them, then great. But, you know, it's
BITW is basically mostly it's must be market cap weighted because it's
market cap weighted. It's mainly
66% Bitcoin
and Ethereum as well.
Right, but then they don't have, if it's market cap weighted, they're missing XRP's not on here.
Well, XRP, because that was a decision based on the rules that they have and because of their SEC issues.
Yeah.
When really, you know, we normally tell people if you're going to buy, just set it and walk away.
Right. Just
Bitcoin and
set it and forget it.
Right. Yeah. Yeah. We don't know how to get into them. I think there's 3 on this list that go to 0.
Maybe you're right.
Hopefully it's the one that's 0.4%.
Exactly.
There's one in the top 5 on there I think is absolutely going to 0.
Well, you can have Matt Hogan on as your next guest, and he can defend the BITW.
And that's Bitwise. You can go to the website, bitwise.com, and you can type in BITW and put in the holdings. And that's, I don't know, guys. I mean, at Wiser Wealth Management, we do not deploy any type of crypto. You know, for our client base, we want to maintain their lifestyle. They're doing good. I don't know that we need to add that. Do we need to know about it? Do we need to learn about it? Do we need to have a working knowledge to have a conversation like this about it? Absolutely. And that's partially what this podcast is about is that we need to, as advisors, we always have to be aware of what's out there. And, you know, if anyone wants to do something special and they qualify, then, you know, send to Robert over here. Robert knows what he's doing.
So I guess the way we look at it is, do you believe in portfolio diversification?
Of course.
Exactly.
I feel like this is bait and switch, but go ahead.
So there are things within your diversified portfolio that you don't like.
Right.
Rick doesn't like annuities. Emerging markets.
I don't like annuities either. We and I agree on that.
But the point is, if you believe in a diversified portfolio, there's things in the portfolio that you don't like.
At times, yes.
And so...
But ultimately, we're looking for what I call long-term healthy asset classes, meaning that I've got these core holdings, and they've always made money over 10 plus years, every single time, right? And if, for instance, commodities has not been a long-term healthy asset class. Commodities is something that we probably should have owned a lot more of in this last year, but man, the last 2 decades, it did nothing for us, right? So ultimately, I think the reason why you would put this into your portfolio in a very small percentage because of the volatility. You're not
That's
putting 30, 40% of your money in this stuff.
We believe in a 1% allocation.
There you
1% allocation gets it done. If it goes to zero, your client's not going to care. If
No,
it goes
and-
up and to the right, they're going to be like, why am I not in it? And,
Yes.
And 47% of advisors are in it. So now you have the other issue, which potentially could be a FINRA issue, where like, why are you in it, Mr. or Mrs. Financial Advisor, and why am I not?
Right.
So again, with a 1% allocation, you're in good shape.
When you see that 1%, are they taking that 1% for somewhere else, or is it just purely like just absorbing it from all other places?
You're taking it from equities. So
Equities,
it's
yeah.
a traditional
Equity
60-40
replacement.
portfolio. You're 59,
Okay.
59-41.
Interesting.
Yeah.
But I agree with your analogy. Like it's, 1%, 2%, whatever the small number is. Like if it goes to zero, you're not functioning in a notice.
That's right.
Get a little tax loss harvesting there and move on.
That's a whole nother thing. That's a great opportunity for advisors as well that a lot of clients don't know about.
Mm-hmm.
So the wash sale rule. There's no wash sale rule for Bitcoin and
All of
Ethereum
crypto.
right now.
Yeah.
So last year when the market was getting crushed, you could sell out of it and buy it right back.
Right.
And now you get the tax loss harvesting as well.
Mm-hmm.
So there's a lot of opportunity. In this way, you maintain exposure to the asset class, and a lot of people, genuinely believe in the asset class. 20% of Americans own Bitcoin.
There could be also a middle ground too. You could say maybe a 60-40 doesn't have it, but maybe a 90-10 does, or an 80-20 does. I'm just trying to think about all the phone calls I get about why do we have long-term bonds in our portfolio? I can't imagine if I added a crypto fund, it would just explode. But yeah, I mean, and that's also, you could have case by case basis. You could always have a crypto edition of your core models that carries it, and let clients make that decision.
What we tell people is, obviously every client is different. Every client has different risk tolerances, but what we strongly encourage is that people link up with a financial advisor. Work with a financial advisor on this. Don't try and do it on your own. This is what advisors do. They're your fiduciary. Stick with them and figure it out.
I think it's, I can't speak as an advisor here, but I would think right now it's easy not to have the conversation because generally nobody wants to talk about crypto right now.
Right.
It's
But
all
this is
negative.
the time.
Which is now
this
that,
you
got
gotta correct. This is the time. But fast forward to the next time crypto's in the news in a positive way and it's doing well, it's like, they'll be beating down your door. Probably not the time. Maybe the situation's different, but the past cycles will say that is not the time.
Yeah.
And it's just
It makes no sense.
Yeah,
it's
makes
human psychology to buy high and sell low. NASDAQ was down, 35% last year? Were people
Right.
running for the hills? Of course not.
right.
Yeah.
It's
not our
rebalance. it's tax loss harvest. It's all of those things. And quite frankly, that's another reason why we talk to advisors about how you can grow your practice by hating Bitcoin. Because again, 20% of people own Bitcoin. So what exchange did you buy it on? Are you over concentrated? Are you overweighted? Are you buying crappy coins like Dogecoin?
What's the custody?
Exactly. Hard wallet, cold wallet, estate planning. So you can add this enormous value by never even recommending it to your clients.
Right.
And that's one of the things we
understanding
teach.
it, right?
Yeah, that's one of the things we teach in our course. The tax issues. It's the first question after your name and address on your 1040 form.
Yes.
Why is that? If this was not a legitimate asset class, why would the IRS be wasting their time? It's here. It's real. It's happening.
Right.
Agreed.
So let's shift the gears just a little bit. Let's talk about the news. It seems like every time I turn the page of the Wall Street Journal, there's someone else is being sued related to crypto, it seems like. So what do you think's going on, Robert? Do you want to talk about your conspiracy theory?
Thanks for that.
They're out
So,
which means we're going to talk about your conspiracy
yes.
theory.
So so what Casey's referencing is, the CFTC has sued Binance. Binance is by far the world's biggest crypto exchange. And Binance.com is the web address for it, but that is where you would go if you're outside the U.S. If you're inside the U.S., you go to Binance.us, and they've had that for, I don't know, 4 years maybe. They kind of created that because regulators in the U.S. Weren't, allowing U.S. customers to sign up for Binance.com. People would get around it, and I think the people getting around the restrictions that are on Binance to US, because they offer a subset of what Binance.com offers from a token standpoint and from a product standpoint, whether that's futures or leverage trading and that kind of stuff. So the CFTC has sued them for selling unregulated futures contracts. I haven't read the full or any of the report. I actually need to do that, but it's something that's interesting is I think that Binance probably will just end up getting fined when it's all said and done for allowing U.S. customers to somehow slip around the cracks and into Binance.com to get to stuff that they don't. What the regulators really need to figure out is how to offer that in the U.S. and we won't have this problem. Again, we need regulation. But it's, so that's that's the news piece. So back to, I guess, what Casey's calling my conspiracy theory here. If you would have asked me a year ago, I would have said this is a fringe conspiracy theory. I actually think it's happening now. So you see all these lawsuits. So, recently Coinbase got a Wells notice. They're about to be sued by the SEC. You have the CFTC suing Binance. You have the Silvergate issue with the bank. Silvergate was a crypto first bank. A lot of crypto companies, that's how they had off ramps and on ramps into the main financial system. So you see those getting sued, squeezed, kind of pushed off to the side. At the same time, literally in the same week, you can see news articles where it's like Fidelity is now offering Bitcoin and Ethereum through your broker or through your retirement account. You have NASDAQ launching.
Retail also.
Retail,
Fidelity.
Absolutely, yeah. So you don't have to be accredited to touch it. You can absolutely
Bitcoin
go.
and Ethereum,
yes.
correct.
It's obviously a subset of crypto, but it's by far the biggest market caps there. You have NASDAQ launching by the end of Q2. They're going to be doing crypto custody. You have JP Morgan's been doing stuff in crypto for a while.
While talking bad about
it, right? And those are just, I'm just cherry picking some easy things there. Sure. At the end of the day, you see the new crypto world being pushed away, the new crypto players being pushed away, even a SEC regulated publicly traded company, Coinbase. And then you have traditional, entrenched finance over here getting to do what needs to be done. And are they doing it behind the scenes to get approval? I don't know how that's working. But at the same time, you have this huge dichotomy of what's being allowed. So my theory is you're seeing all of, basically the proof of concept version of crypto getting squeezed, pushed away, and all the value is going to get extracted by traditional finance. And, will there be some acquisitions right now that they don't have to be? The government is doing all the hit jobs on the current players. Maybe they'll buy the carcass once it's all said and done. Right. But it's just kind of interesting to kind of see this. There's not much in between. There's a huge diversion in the sea here. And just how long term, once big or traditional finance is willing to touch it, it's going to happen. These guys aren't pouring the money into it and taking the risk that they're functionally taking if regulators are going to come along and swat the whole industry away. And to your point, it's on the IRS form. It is not an if, it is a when. And it's just, you just try to see this play out. Unfortunately, I thought it was a conspiracy theory. Now it's reality. And, is this going to be messy in the meantime?
That basically the big players are going, oh no, this is legit. Here, we're going to do this. You little guys go away.
Right. I mean,
and like you said, the government is doing the job for them. They don't have to do anything behind the scenes. They're literally, the government's literally making all the innovators disappear.
Right. And they're just in some ways handing it up to a silver platter. I'm not willing to go as far as currently, I'll say this, I'm not willing to go as far as to say that crypto is going to be an accredited only threshold. There was a period of time a couple weeks ago, I thought that's where this path was going to take us. Now that you see the Fidelity kind of doing what I think that is off the table for the most part. I could see crypto get broken apart into different functionally classes where some of it's accredited only and some of it is, I guess, in some ways security, non-security type situation. Because the vast majority of cryptos do act like securities right now. I will say that. Right. But it's, it's frustrating, right? Because we could, the whole kind of little quip at the U.S. The U.S. is willing to try everything. I got that wrong. The U.S. is willing to try all the options until they try the good option. Right. And that's kind of where we're at here. It's we could be the leader in finance. We could stay the leader in finance, or we're just going to have a brutal beatdown of the industry. There's rumors that the SEC is reaching out to their counterparties in Canada and the other G7 to say, we need to have a collective regulation on crypto. Well, maybe, but if it's the way that the SEC is currently acting, then no. If it's the way that the other G6 are acting, then yes.
Right.
So it's like, I don't know. It's a messy battlefield out there right now. So
I guess though, how much different is that from just the history of finance, where the little guy or gal kind of sticks their neck out to try and create something new and innovative, and the big guy or gal is behind saying, you go first, and then we got all the money. And
well, I think that's true. That's kind of the American way that
Right.
people can come here, or who already live here can do that. But the difference is they sell to Google for a couple $1 billion. They don't get essentially drugged through the court system in the process. You know that
courts, and also like the technology would provide a world. I don't think it's necessarily going there, at least in the short term or even medium term, but like where you don't need a bank. Like you could totally go around the
biggest threat.
That is absolutely, that is the existential threat here. Like,
well, that's the SVB. I mean, that's
right.
Brought that. I mean, look at, I think Bitcoin's up over 30% since that scandal broke. I mean,
it's a challenge because, I'm a technologist. That's where I come from. So it's like, I would love to see the technology used to its full potential.
Yeah.
But I understand that like, that's not version 1 of this, because it will never get brought up to the level that would be acceptable by mainstream, but maybe long term. I mean, maybe the U.S. is not where it happens first or 10th for that matter.
But what's super exciting, and I think your listeners can really appreciate, is where this is going. And what I mean specifically is like tokenization, driver's license, passport, medical records, all that, concert tickets, sporting events, all that's going to be on your phone. And it's going to be a beautiful thing. Look at just here, I don't know the specifics, but just here last week in Atlanta, a house was tokenized. So you're taking an asset class that's 3 times the size of the stock market, that is part of a diversified portfolio that has been illiquid, and is being demonetized and democratized to where regular people will be able to afford to buy tokens in real estate, which will be great for the diversified portfolio. And for retired people who are looking for sources of income, they'll be able to tokenize their house.
So it's a token that is...
It's like an NFT.
It's an NFT, yeah.
Okay.
So retired people who are collecting money from Social Security will also be able to, if they're interested, tokenize their house and sell these NFTs and collect the money for that. And people ask, well, that makes sense to them, but why would anybody want to buy these tokens? Well, obviously they believe that the home that they're buying the tokens in will appreciate.
Right.
So there's just example after example after example where this is happening. And I think that that's probably most valuable to your listeners, is understanding the utility and how this is being used in everyday life, where they're like, I didn't think about that. Yeah. Springsteen just sold his music catalog. You'll be able to buy a token to Born to Run. So every time it's played, you collect a royalty, but the royalty is so small that you can't get paid in pennies. You're getting paid in Satoshis, which is, it goes out 9 decimal places for a Satoshi.
Yeah.
So this is what's happening now. And again, I think that that's where your listeners will be like, I didn't know any of this. This is making more and more sense. I'm seeing this in my everyday life. Maybe there really is a there.
Absolutely. Even late last week, I was reading a patent that got approved for Bank of America. They're the one that filed it on tokenizing car titles. I'm like, why does Bank of America care about car titles? My guess is it has to do with, like the CarMax, the places where you can take your car title and get cash. Those are incredibly rich fee structures that could be disseminated by crypto and be able to tokenize and be able to get, I only need half of my car titles worth of cash, not all of it. Like those kind of scenarios
And think about how much money you're saving. Like you buy a house, you're paying a title company. Like all this is because you're in a trust economy.
Right.
But it's going to, when it moves to the blockchain, it's going to be an authentication economy. Yep. And right now, these trust people, these lawyers, these mortgage brokers, they're like 21% of GDP. Like that's going to go away. Like it's the white collar workers that are in trouble.
Right.
Yeah.
And so, but think about the massive amount of savings and time. Think about how much money you have to pay to buy a house in terms of just,
title
getting
returns is 1% a lot of times.
Not only that, but just all the paperwork and all the money and the lawyers and all that you have to invest when it's going to be done much more simply.
Simply and quickly.
Exactly.
I was about to say, can we do it inside 60 days?
Yeah, I mean, you could do it inside of probably 10 minutes.
And it's all going to be authenticated on the blockchain.
Yeah.
You know, and it's the time aspect, it's the saving aspect, and it's the pure like transparency aspect. Like right now, like if you're going through a mortgage, you know, some attorneys' offices that are handling the process may have a portal you can log into. You can see like what task you need to do, but you can't really like see it. Right. It's like their function is checking boxes on the other side.
Right.
Like the visibility aspect, I think, provides better oversight for regulators and that kind of stuff because it's the ability to kind of, you know, see it publicly. And, you know, and it doesn't, tongue-tied, it doesn't necessarily have to be public. I mean, there's certainly private blockchains.
Sure.
But at the end of the day, it's just the technology. You know, in a world that has less and less trust each day, oddly enough, this is a solution, you know, at least that I see to it. So.
Yeah. There's so much more here than just the Bored Ape Yacht Club. There's just so much more here.
I mean, you know, I always explain blockchain is the underlying technology. Blockchain is a database. You know, crypto is just a vertical off of that when it deals with money. You know, you talked about identity. You talked about, I mean, voting is another option. And like there's, you know, I wouldn't say infinite, but there's a tremendous amount of opportunities to use this kind of technology to provide trust and provide clarity and all that kind of stuff for people going forward.
And further to your point, when we get asked, what is Bitcoin? It's software.
Mm-hmm. Yeah.
To do a lot of other things with.
Exactly.
Yeah. Interesting.
And the Bitcoin blockchain has never been hacked.
Right. That's good.
Yeah.
So yeah.
I was thinking all the things that get hacked.
Yeah.
The Department of Defense has been hacked. So
Yeah.
to not have a Bitcoin hack is actually a pretty big deal.
And the government loves this because it's all traceable. The Colonial Pipeline, when I don't know, 21 million or something was stolen.
Right.
They got that back. They love this. It's like 3 to 5% of GDP is through illicit activities, through cash. Like the argument, and there is an argument, I understand, the privacy issue. Like, unless you come up with a better solution, that game has been lost. Mm-hmm. Credit cards, debit cards, people can track where you're spending money. Unless you're going back archaic, wherever. Well, I'm gonna buy everything in cash. Like who?
Right.
When's the last? I haven't carried cash in 5 years. The only time I ever carry cash is when I go to a valet,
right,
and I got to give the guy a tip. And now they're making it where I don't even need cash anymore to even do that.
I would say that'd be awesome
because they want tips because nobody's carrying cash.
Exactly. Yeah. So I mean, like, come on, like, it's crazy.
So what do you think for advisors out there building portfolios? What do you think is the best solution right now? Because there's quite a few of them that are more innovative. There's the Bitwise products. Have you seen one? Can you tell me that? I know they're all customers of yours, but
yeah. So that's a little tricky question. I mean, again, me personally, I own a VanEck product. I own some of the Bitwise products. Unfortunately, I own Coinbase.
Direct, you mean the stock?
The stock itself, yeah. There's great ways to get exposure, though. Again, you can buy the miners, which are publicly traded stocks, whether it's Marathon or Riot. Mm-hmm. You can buy the Bitwise products. Global X has some products. Invesco, even the QQQs give some exposure to more of the picks and shovels plays within the space.
Yeah.
I think, again, we don't manage money, we educate. What I would recommend is, and I know you're not going to like this, but we find that advisors look at Bitcoin and Ethereum, and after that, their heads are ready to explode. So look at those two. again, the medium in which you want to buy them, you could, again.
Well, I feel like the Bitcoin play is much like Warren Buffett saying, well, if you can't be me, if you can't be Robert, then go buy Bitcoin. Otherwise, yeah, I've seen it all. I've seen people. So we see everything when people come through for review meetings, right? Mm-hmm. And there's certainly been a very strong uptick in crypto. They don't want to tell you about it now because they've lost so much money, right? But what the strangest thing I've seen, I think, in the last year has been a lady who happens to also love gambling.
I can't wait to see where this goes.
Had her Coinbase account, and she's, oh yeah, I love my coins, and she was just like day trading coins as if she was sitting at a slot machine, and I was just thinking to myself that's not good.
So some tenets to live by or follow is we're believers in dollar cost averaging. Take it offline. I think we've learned that. I've learned that myself. I'm a victim of the Genesis situation. So buy it online and then put it on a ledger or some sort of drive offline. Those sorts of things.
The SEC recently was asking for comments about classified custodian, I think is the word they used for crypto. Solving the custody problem is what's going to unlock the next wave of retail, because while we can say, yes, take it offline, and that is the right answer right now, that is hard. It is. The average person doesn't have the time or interest, and they're going to end up losing their coins in the process of doing that.
Well, that's why you can buy these other funds that will do it. But that whole comment period, like, I don't know. I was talking to Rick, like, it just blows my mind. Like, for 100 years, like, custody has been separate from exchanges.
Yeah.
To me, that's common sense. Like, why were firms in the crypto space thinking that it's a good idea to combine them both, and that, like, at some point this just wouldn't blow up in everybody's faces? I mean, it's common sense. It's as common sense as the SVB thing. Like, why were they buying 10-year treasuries and 30-year treasuries? My 11-year-old understand. I'm teaching her now, like, you buy 30, 60, and 90-day treasuries because they're actually paying more. And even back then, when they were paying less, they expire or they roll over. Like, common sense. Like, my 11-year-old, she doesn't go to Harvard, doesn't have an MBA. Like, how do they miss those things? It just blows. And again, that's traditional finance. So again, this is not a crypto thing. This is a human thing.
This is my attempt to answer your question on why crypto exchanges did this. So, and I have like no inside information, but my hunch would be that they didn't have any other option, right? Like, the industry was growing up. There was no custodian. Like, if you rewind 5 or 6 years ago, like, BitGo was probably the only custodian around. And, like, maybe exchanges use them for some of their cold wallet stuff, but at the end of the day, the industry is just so young. It had to grow from somewhere. I think long term, yes, it needs to be two separate places.
Yes.
But, until the SEC and the government kind of gets their act together and regulations, like, there's nobody setting the rules. Like, it's just kind of like,
it's a power grab.
It's a power grab, absolutely. I mean, that's
when there was nobody setting the rules, they still could have looked and said, okay, well, this is the framework from the traditional system. What's good about that? And maybe we should keep some of that in our existing. And also, they probably wanted to do so many things. You can't put stadiums after yourself and put FTX on the umpires of Major League Baseball without serious cash, and they didn't have it, and so they had to go use your money in order to pay for it.
I mean, they were raising crazy billions of dollars, so it appeared that they had it, right? Like, it's the problem. We've had many episodes of people want to go talk about.
Some of that was paid for, though. Am I right or wrong on that?
Agreed. Obviously they're not going to finish out that contract, so who knows?
It's a good country. What do they say, that whoever's got the ads in the Super Bowl is a good contrarian bet?
Right.
That and Morningstar. So when I see the 1-star rating, that's a buy.
That's a buy.
And when I see the 5-star rating, I'm running for the hills.
Right.
I'm out.
You can't maintain that 5-star rating.
That's right.
Sure. I just think that, like, the technology has evolved and moved so quickly over the last, call it 12, 13 years, that, like, it's easy to sit back and, Monday morning quarterback this thing, but, like, it is evolved so quickly. I remember, like, when I was first mining Bitcoin back in 2012 timeframe, like
Good for you.
briefly, there's a sad story there too. But like it was such a small thing that like literally the receipt emails and you could reply and Brian Armstrong was on the other side of that email. Like the CEO.
Wasn't it like, weren't like people buying and selling Bitcoin like through like chats or something back then?
Yeah, I mean, it went through forums.
It was very
before,
hard to get access to it.
I mean, there was functionally no liquidity, and it was just kind of like you would just kind of set up your own market effectively and negotiate it. It was like an OTC trade more than anything else. The other side to my Bitcoin story is I mined them for 6 months and then got bored and sold them for $82 a piece. So there's the side.
You and the guy buying the pizza.
Right. So, I have a love-hate relationship with Bitcoin. Like that's the hate side of it. The love side is it brings people in the industry. They get curious. They find other things. I think there's a lot more to crypto than just Bitcoin. But Bitcoin is the Band-Aid or the Kleenex of crypto.
So Robert and I went to the same college.
Okay.
But he was a little behind me. I'm a little older. So Robert was doing, he's always leading edge, right? So he was doing paperback swaps, right?
Swapping books, yes.
Swapping books. So he infringed on the student council, so he got in trouble for cutting into their profits. But basically, textbooks are expensive, right?
Sure.
So he kind of brokered a system that you could swap the books.
Trade in exchange.
Yeah. I mean, it functions like a local Craigslist to a campus.
Yeah,
that's cool.
And then fast forward to Shootproof, right? Delivering basically a website for photographers to be able to edit and store.
Yeah, for wedding photographers to share their photos,
which was kind of leading edge at that
That's
time.
cool.
Sold that, and now he's doing his fund. And so I will say that when he's talking about what the future looks like, I don't ever disregard it. It doesn't mean it looks kind of weird and scary sometimes, right?
Yeah, and it's it's hard to like want to talk about this stuff sometimes because you're almost certainly going to be wrong in some sense.
Right.
And it's just trying to figure out what parts you want to be more convicted about. Like,
right.
So
it's like a VC fund. What are they wrong like 2/3 of the time, but the 1/3 like crushes everything else.
Absolutely. Yeah. So it's,
I think to go back to regulation and Congress and stuff, I think another thing for your viewers to be aware of is like crypto is, believe it or not, one of the few areas where there's bipartisan support in Congress. It's different shades of gray, but you've got Elizabeth Warren, you've got Maxine Waters, you've got Ted Cruz, you've got Emmers. You've got the Biden executive order. So there is bipartisan support. Again, it's not always exactly aligned, but it's there, and that's super interesting.
Yeah. I think that's I guess that's a decision as an investor you have to make is are you going, if you see this as being something real 10 years from now, then this is the on-ramp, because once that comes into place and once there's framework and once it really is a Bitcoin ETF, at that point it's pretty stable, I would think, right? Because now there's a stable environment for it to operate in. It wouldn't be different than
stable in the sense that there's like you don't feel
there's
like
no
the SEC is going to send you a
prices.
Wells notice without telling you what you did wrong first, right?
Right.
So, but yeah, I think this is a multi-decade evolution that's going to happen, but the front end of it is going to be bumpy, and that's where there's alpha if you decide you want to put up with the volatility. So.
And all the industry wants are rules and roadmaps.
Absolutely.
And Commissioner Peirce gets that.
100%.
Like she's all the way there. Like she's pragmatic, well thought out, wants to work collaboratively and collectively, and understands that like if it doesn't happen here, people are going to go to other parts of the world. I mean, China already has a CBDC. It's crazy. Like the Bahamas have one. Nigeria, I think it's Nigeria has one.
Yep.
Yeah.
It's when Hester Peirce, whenever she speaks up and has a rebuke to whatever the commission is voting on, and she didn't like it, I love to read those because she is like, she does not mince words, and it's just purely like you're a bunch of fools. Like, she didn't say it that way, but she's getting close. So
if you digitize the dollar, how's that any different than Apple Pay on my phone?
I'm not sure it is much different. Robert, you want to handle that one?
It's really not.
I would say we're going to see. We functionally already have a CBDC here. We just call it USDC. It is a stable coin.
Right.
I think that you're going to have a retail level of this. You're going to have a commercial level of this. The fear is the Fed decides to do the retail side of it, and then they have access to the transactions. I'm not for that. I'm all for the privacy or there being a separation of concerns.
So to be clear,
you'll have that.
So to be clear, right now, I mean, with a subpoena, you can figure out your credit card statements and where you spent the money. The difference is, what did you buy? Because now it's
in real time.
And
exactly. Also, to clarify, and Robert, correct me if I'm wrong, you're going to have a common question is, if there's a CBDC, do you need stable coins anymore? So CBDC is essentially, call it public, like a government issued coin, versus private coins, which are, like you said, USDC,
right?
Private coins. And I think they will both survive.
Yeah, I think, the commercial side of it or the non-retail side of it is going to be where they deal with other central banks. Like it's going to span outside the country in that sense, more for a like a central bank settlement layer. The retail side of it, the USDC, like it is functioning no different than a Fed-backed stable coin. It's just not the Fed's marketing it. Like it is backed by treasuries and cash.
And that's the key for your viewers. It's backed by a fiat currency at a 1-to-1 peg. Yeah, it's important for your viewers to understand that.
And it's, I think it was 2 or 3 months ago, even like USDC, they have, I think 80-something% of the reserves, they're like, call it $40 billion in total, is through a BlackRock fund that is sitting at the Fed. Like they're the single customer of that fund. So they have gone out of their way for good reason to be on the up and up and try to do all the right things. And you're contrasting that with USDT, so Tether. Not to say they're doing anything wrong, but they're not being transparent. Yeah. And they're outside the U.S. It's more like the Eurodollar market than anything else. And that's why the Fed, I think, doesn't like cryptos, because that is, an $80 billion or $90 billion market cap type.
And again, a lot of this is just common sense in the respect of there was an algorithmic stable coin which imploded, blew up, however you want to refer to it. Like, common sense, again, going back to my 11-year-old who I love the bottom of my heart. Like, she even understands, Daddy, there's something here that doesn't seem exactly, it sounds very confusing. Well, okay, then let's stay away from that.
Much like leveraged ETFs.
Exactly.
Yeah.
But,
and be careful with futures ETFs too.
Yeah, that's right. That's right.
So the ironic thing about the algorithmic stablecoin is, so 2-3 weeks ago, Coinbase launched a new blockchain based upon Ethereum. That's not the point of this conversation. The point that I'm getting to here is they have different aspects within that coin, and part of it is they're calling a flat coin. Sounds a heck of a lot like a stable coin, and guess what? It's algorithmic based. I'm like, did we literally a year ago had to learn this lesson? Like, why are we talking about this? So we'll see if that goes anywhere. And considering they got all this other stuff with the SEC about to happen, like maybe it causes them to rethink some of that. But like, goodness.
Exactly, just common sense. There are investment opportunities out there that are compared to that safe and smarter and just more logical, more common sense. I mean, there's risk to everything,
right?
But it's about risk management.
Let's final question. Let's come up 35,000 foot here. How does this affect like foreign trade? Right now, U.S. dollar is how we all do foreign trade. Do you see in the future that there's some type of digital global currency that there's one? Is it? It's probably not Bitcoin, but is it a mixture of something? Is that something that conspiracy theorists are out there with all kinds of theories about how all this stuff gets built out? But is there a race for digital currency that is we all trade in?
A single currency?
Yeah, or maybe a mixture, a basket.
Robert?
Is that even possible?
I think part of what Casey's getting at here is, so you have currently most people trade in dollars, right?
Yep.
That world seems to be coming to some sort of end, whether it's full end or just a more narrow basket of countries, because you contrast that with the BRICS that are setting up their own system now. I don't think it's fully stated I think that's going to be asset backed in the sense there's like gold and oil backing that one, which kind of makes some sense, quite honestly. I see a world where you have, I don't know, say 2 or 3 groups of countries, right? that need to trade, and obviously they're going to need to interact with each other, or unless we're just going to a world where we're totally siloed. I think that there's, I don't know if it's 2 or 3 or 4. I mean, at some point, liquidity is going to kind of end up in the bigger pools, and I think that you end up with digital assets that are going to help bridge those. So the
digital assets don't replace that; they just simply make those work together.
Because you could be in a world where, say, the BRICS country doesn't want to touch the dollar.
Yeah.
More from a political standpoint, more than anything else, would be my guess. And they have the ability to kind of trade, businesses be able to trade in and out of those different markets. If you put in air quotes there, but I don't know. That doesn't seem crazy to me that would happen. There's been conspiracy theories in crypto for a long period of time that was going to happen. We seem to be creeping towards that.
Yeah.
So
I think the underlying theme there, though, is it's going to be faster, cheaper, and more transparent.
Yeah. And I think that's where the tokenization comes in, right? Like you can literally tokenize a barrel of oil and say this is worth, I don't know, call it $80,
mm-hmm.
and then you could trade that on a blockchain and know, that there's only 1,000 of those versus people being able to sell that same barrel of oil 3 times.
Right. Yeah.
So.
All right.
Yeah.
Guys, great conversation. Thank you.
Yeah, I would encourage people, if they want to get educated, we have our certificate in blockchain digital assets. We also have Rick's book, The Truth About Crypto, which you can buy on Amazon bestseller. You can also buy it, I guess, any bookstore you want as well. It's a great opportunity for people. Rick takes very complex topics and breaks them down into very simple and easy to understand concepts.
And we probably have a lot of advisors that listen to the conference or to the podcast. So go ahead and plug your.
So Rick also does a weekday podcast. It's called The Truth About Your Future with Rick Edelman. And it's Monday through Thursday. It's about 3 to 10 minutes each. Friday's more traditional format. It's 1 hour long, and it covers what he feels are the 4 most important personal finance topics, which is longevity, retirement security, exponential technologies, and blockchain and digital assets.
And then when's the conference?
The conference is, I said June 13th to the 14th. It's actually going to be June 12th to the 14th because we just added a pre-conference workshop on the 12th, which will allow people to learn about what is Bitcoin, what is blockchain, which is a great precursor for the event itself. And what's also cool, at the event, you're going to have the opportunity to mint your own NFT. Cool. Because we're doing an NFT workshop. That's cool. So that'll be cool too. And for advisors, there's CE credits. So it's a lot of fun. We also do webinars, which are free, which you can listen to. Again, DACFP.com, DACFP.com.
Cool.
Great.
Awesome.
Thank you.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This episode was produced and edited by Ken Hoadley.